Pause with the bands. Pause with the pause with the pause with the bands. Pause with the pause with the pause with the bands. Pause with the bands.
Haven't seen you guys for so long.
I know.
Yes. How is you guys' life recently?
Not so great. My company is having a financial problem and I'm thinking of quitting and perhaps finding a new job.
Seriously?
Yeah.
God. I can relate to you. I don't have a permanent job. I feel like I'm always on the edge, never knowing when the next paycheck will come.
I'm so sorry for hearing you guys' story. I probably wonder if I can help you guys. What if you guys joining me opening a new business company under cooperative society? Interesting, would it be?
Wow, that's brilliant. But what is cooperative society?
Cooperative society means a cooperative society means any society registered under Cooperative Society Act 1993, which is incorporated under Companies Act 2016. A cooperative society is a voluntary association of individuals who come together to achieve common economic and social objectives. It operates on principle of equality, mutual benefit, and collective decision-making, with membership open to all regardless of religion, gender, or caste. Registration of a cooperative society is compulsory, granting it a separate legal identity and ensuring its operations remain unaffected by changes in membership. Members have limited liability, meaning they are only responsible for the capital they contribute. Cooperative societies emphasize democratic management, transparency, and equitable distribution of benefits, making them an effective tool for promoting collective welfare and economic stability.
I heard that there is a lot of benefit you can earn from this cooperative society, like cost saving. By pooling resources member, you can reduce cost of tax filing and tax consultation.
Yeah. I heard of that too. There's also another advantage of this cooperative society, which is decision making for all members. Each member, regardless of their capital contribution, has an equal voting rights. So this ensures that the society has the best interest for all members.
Wow.
Yes,
That's a great thing.
Yeah.
right? It's settled then. Let's meet on this weekend and we can start brainstorming. We can turn this situation around together. Yes. So, you guys, we all here to give an opinion whether we need to accept this offer or not. But before we go further, I will explain to you guys what is cooperative society means under public ruling. A cooperative society is defined under ITA 1967 as any cooperative societies registered under any written law that relating to cooperative societies in Malaysia. So what else you want to know?
I'm wondering about the tax treatment for cooperative society. Can anyone explain it to me, please?
I can help you with that. First, we need to consider the cooperative society aspect. As you guys know, co-ops can have unique tax treatment. They were generally taxed differently than regular corporation. Let me go further.
First, the treatment of receipt. All taxable receipt must be included in the total income for the year of assessment. The encompasses business profit, rental income, and any gains from the sale of asset, unless specifically exempted by tax legislation. Next, the treatment of losses. When it comes to losses, certain restrictions may apply to their carry forward. This includes time limits and limitation based on the nature of the losses. Understanding these rules is crucial to maximizing tax benefit associated with the losses. Finally, chargeable income. Chargeable income is calculated by taking total income, which includes all taxable receipts, subtracting allowable deduction. These deductions includes business expenses and special deduction, the result of the total income that is subjected to taxation.
Cho. There is also an exemption. Let me explain further.
Cooperative society can get tax exemption under paragraph 12, but it must satisfy these two conditions. The first condition is the newly registered cooperative society get tax exempted for a period of 5 years, commencing from the date of registration. For example, if the registration date is on 1st January 2020, thus the end of duration of 5 years will be on 31st December 2024. The second condition is cooperative society that has been registered for more than 5 years is exempted from tax if its member fund as the first day of basis period for the year assessment is less than 750,000 ringgit. It is because to encourage the cooperative society to grow and develop.
That's so interesting, Nisa. But there are also specific tax deduction and members fund for the society. Let me explain about it.
In the world of business and finance, understanding the composition of a company's fund is crucial. So today we'll delve into the concepts of members fund and break down its key components. Members fund represent the total equity invested in a company by its member or shareholders. It's not just about the initial investment. It encompasses various reserve and also accumulated profits. So let's explore the 5 main elements that make up these funds. First, we have paid up capital. This represents the actual amount of money received by the company from the issuance of shares and subscriptions. It's important to note that this excludes bond shares if they were issued using capital reserve created by the revaluation of fixed assets. This distinction is crucial for accurate financial reporting. Next is the statutory reserve fund. This is a reserve mandated by law in some jurisdictions. It's a portion of profit set aside to strengthen the company's financial position and provide a buffer against potential losses. Moving on to the reserve other than capital. This category encourages reserve created from various sources, excluding those arising from capital transactions. A primary example is reserve created by the revaluation of fixed assets. However, it's important to exclude provision for depreciation, renewals, replacements, and anything becoming in the value of asset when calculating this reserve. Finally, we arrive at the balance of profit and loss appropriation account. This represents the accumulated retained earnings of the company after distribution, such as dividends, have been made. It's actually the accumulated profit that has not been distributed to shareholders. As we look at the example just now, the first 5 years after registration from 2011 to 2015 represent an initial tax exempt period. This means that income generated during these years is automatically exempt. Therefore, the income for the years of assessment 2011 through 2015 is exempt because it falls within this initial 5-year window. Furthermore, the income for year assessment 2016 and 2018 is also exempt. This exemption is due to the members' fund remaining below the 750,000 threshold during those years. So now, let's focus on 2020. In this year, we will assume a total income of 700,000. We need to consider special deductions to arrive at the chargeable income.
In summary, we have seen how the initial 5-year period and the members' fund threshold can exempt a cooperative's income from tax. We have also walked through the calculation of chargeable income considering specific deductions.
Wow, you guys have already done a great deal of research. Therefore, I think we all agree to work together and create a new history, right?
Yeah.
Yes.
So, if we decide to accept this offer, we cannot be late because the submission date is within 7 months after the end of its accounting period for the assessment year, as per Section 77A of the ITA 1967. A cooperative society must submit the ITRF form of C1 to the Director General of Inland Revenue within 7 months after the end of its accounting period. Even if the society qualifies for the tax exemption for the year, they must also file the ITRF to determine its capital allowances, adjusted income, and its adjusted loss for the year. For a cooperative society, it is taxed based on scale rate as shown in Part 4, Schedule 1, 1967.